Outside the sun is shining and so it is on Bitcoin. This was likely the bottom and I am all in again. As regularly announced later on this channel and on Twitter, we have long anticipated a likely fakeout below the strong $30,000 support zone. We have equally so discussed how such a V-shaped fakeout would be the ideal bullish case for Bitcoin. My anticipation was all along that we'd go down towards the $27,000 area, give or take. Yesterday, however, Bitcoin bounced at $28,600 and shot right back up like a missile. It's nice to be back in the summer heat. Now, I don't mind missing my fake out target by $1,500 as I never intended on buying it anyway. And the reason for that is simple. For if Bitcoin were to not make a V-shaped recovery and instead either pause or continue past that level, then things would look dark, as in real pessimistic in my opinion. For as technicians, we want confirmations to our theories, and not until then are they of any value to us. All I wanted was for Bitcoin to fake out below 30,000 and find its way back up again. That'll be our confirmation. And as I watched the fake out happening live yesterday, I got all the technical confirmation I needed and more. All in all, this can, from a probabilistic point of view, have been the last pain before new gains, and that's exactly what we'll discuss today. But before digging into today's very bullish episode, I must disclose to you that nothing in this episode is financial advice. Everything you hear me say is my own subjective thoughts and conclusions only. And if you appreciate what I do, and if this episode helps you bring clarity to Bitcoin state and technical sentiment, then please return the favor by hitting the like and subscribe buttons. But even more importantly, kick YouTube's algorithm in the balls by sharing this episode with others who may benefit from hearing this too. For there are a lot of people out there who aim in the dark and who will buy back their Bitcoin losses at $50,000 or $60,000 or higher, thus missing out on a low risk and high reward spot. Just like I would myself a few years back, and which is the very reason why I started this channel. Here's exactly why things look sunnier than the summer sun and how I've decided to play this myself. After painful months of Bitcoin winter, we've finally reached summer, both literally and in Bitcoin. For that reason, screw the moon, for Bitcoin's off to the sun. Since mid-May, we've been battling whether this 5-week sideways range is a bearish continuation or an accumulation phase. From a risk to reward point of view, Bitcoin is in a really strong place. We got a fake out, which, as we've talked about a lot on this channel, is a common way for any accumulation to shake off the final weak hands. As you know, I expected this fake out to reach the technically justified area at around $27,000. I won't parrot the reasons again, for I've already laid them out in full on several occasions. For as I mentioned at the beginning, the intention was never to buy the dip, but to buy once Bitcoin got back on the horse again, once that V-shaped fakeout was confirmed. And we got that, and we got much more. Now, upon this fakeout, Bitcoin bottomed out at 28,600, give or take depending on what chart you look at. This to me is a sign of inherent strength as the bulls stepped in immediately. And the best way to technically confirm this is to look at the 4-hour chart, as it contains both the breakout and the reversal. This volume right here tells us that the bulls are in full control, that there are people who've been sitting on their hands waiting for something like this in order to accumulate. And more so, the candle ended up as a green one, which technically is much stronger than had it ended up in the red. For this right here is like the superhuman boxer that gets up on the 9th count and completely destroys his opponent, like any hero movie from the 80s. This candle in turn was a bullish reversal pattern. I'm not sure whether this qualifies as a hammer or as a dragonfly doji, for it doesn't seem to fully match either of them. Yet that doesn't really matter. The point here is that this is a bullish reversal candlestick, and especially so as it took place both at the bottom and at a very strong support. And to further obsess about this candle, we had a similar looking one on the daily chart and at solid trading volumes too. To add boost to the bullish fiesta, we have a steadily increasing RSI on the daily. This is textbook behavior prior to taking off, and the ideal scenario now would be for Bitcoin to make a clear lower bullish red touch and then just fly off like a spring to summer. Yet I'll still settle without it, for this whole concerto of bullishness speaks volumes on its own. Now, we've had a 55% price correction, a long time-based correction, and we've hung around in a price zone not seen since January. I think the market has had enough of pain, and this right here, as in everything I've just gone through, was the confirmation of a bullish reversal. And in addition to that, the accumulation fakeout in combination with the high volume 4-hour hammer at the very bottom and at key support was all I needed to see to know that things have gone from winter to summer. I am now back all in again, as the risk to reward is way too mouth-watering to resist. And we'll talk more about that and my strategy in just a bit, so please do hang on. So far so good, but what then about the dangers? As strong as this turn of events may be, we're not spared from danger. Bitcoin can turn at any time, and never forget that. But as we're not wizards but rather gaming theory wizards, we still know how to exploit the probabilities in our favor. In the very short term, Bitcoin still has to overcome the upper bearish blue RSI line on the 1 hour and leave this 8-day bearish blue channel behind. As of producing this episode, the price is seemingly consolidating in this resistance zone. For overcoming this within a reasonable future is important. That leaves us with the big issue at hand, the risk with a capital R. If Bitcoin were to break below the key support at 30,000 again, that would be very bad. This would be the stop loss at which I'll release everything, as in 100%. For if Bitcoin breaks below it once more, then the bullish magic is all gone, and the reason is simple. This strong bullish reversal team of technicals and indicators coming together needs to kill off the bearish sentiment entirely for it to have any palpable effect. For don't forget that any bullish effort like this comes at the expense of a lot of energy. And given the long-term bearish sentiment, not much is needed to kill off any hope. The bulls have won the battle and spirits may be in the sky, but if the bears were to ambush the bulls now that they are exhausted and trying to regain strength for an additional move, breaking below 30k would do just that, as in ruin the morals. For if we break below again, don't for a second expect it to stop at 28k. Then we're going down for real and it will be nasty, nasty, nasty. You're a naughty bastard! Now, looking at the weekly chart, if Bitcoin can close this week's candle in the green and above this long stretching diagonal support line, then it would further confirm what we're all hoping for. And ultimately, if we can find our way up and beyond the key $42,000 to $42,500 resistance zone, then not only would that be an additional bullish confirmation in itself, we'd also push away entirely from the weekly EMA ribbons on which the price is currently resting. But going back to the diagonal support, for whatever it's worth, we must close above it in order to avoid technical confusion. For closing below it would in itself be a sign of emerging weakness, and the last thing we want now is mixed signals. The more question marks and ambivalence we can straighten out, the stronger the bull case and momentum that comes with it will be. As you can see, there are several things that need to come together for this to generate the big thumbs up needed to once and for all justify being bullish again. But at some point things must turn around, and this here looks like it might just be it. For given the inherent strength that we've seen due to this fake out, we in fact stand a decent chance of this being the very reversal. So based on all this, how then am I playing this? Marathon Digital Holding is rather fascinating, as it's displayed far more strength than that of Bitcoin. For whilst Bitcoin has moved sideways for more than a month now, Marathon has progressed by establishing an ascending megaphone formation. And not only that, for as both Marathon and Bitcoin generated lower bullish red RSI buy signals respectively, that of Bitcoin got stopped out, whereas Marathon's signal just 2 weeks ago still stands strong. As both Ethereum and Cardano look weak in relation to Bitcoin, I firmly expect the next leg up to be Bitcoin's time to shine for some time to come. Alt season shall follow later again in the cycle, and as I expect a serious move to the upside in Bitcoin, I see no point in holding back on my ammunition. For that reason, I'm putting it all into Marathon, which as we know moves exponentially to that of Bitcoin. Upon getting gradual confirmation that Bitcoin's fakeout was legit and that it could in fact hold up, I gradually increased my already solid Marathon position when Bitcoin climbed to $32,000 and $34,000. I now have all my eggs in one basket, but it's not as risky as you may think. For first of all, I bought the lion's share at $20.50 and I'm already in a good 40% profit altogether. Secondly, if Bitcoin were to break below 30,000 again, I'll just release it all as mentioned earlier. For upon any such event, I sure expect the crypto space to burn. I look at it this way, the chance of this having been the actual reversal in Bitcoin is high, and not counting my initial Marathon base position at 2050, my additional all-in top-up stands at $33,000 on average. This means that if Bitcoin were to drop by more than 10%, I'm out. But if this were to be the reversal in Bitcoin and crypto space, then don't for a second expect Bitcoin to stop at the previous all-time high. No, it'll proceed towards new ones. If conservatively speaking, we assume that the next top before a correction of 20 to 30% or so stands at $90,000, that means that the upside from here is $57,000, whereas the downside is $3,000. That renders us 19 to 1 in odds in favor of going long. If we reverse engineer those odds, it means that for as long as there is at least a 5% chance of this being the bottom, any probability above 5% amounts to our profit margins. And I think we can rather safely conclude that those odds are far superior to a 5% likelihood of being true. Make that 50 and we're still counting it low based on the very convincing technical so far. This is exactly the type of spots that I'm looking for. Now all that is left to do is to wait and see how this plays out. I'm certainly positive myself and I sure do put my money where my mouth is. That was all for now. Thank you and goodbye.